All right, everyone. Well, I wasn't expecting this, but we now have a second recap for today because BENF stock ticker went up 577% in about 90 minutes. This is an incredible move. And what makes it even more incredible is the fact that the stock has no news. This is always tricky. Why would a stock go up nearly 600% with no news? It doesn't really make sense, and yet it can happen. So one of the things we say is that the market can be irrational longer than you can remain solvent. So traders who got stubborn on this and said, I'm going to short it at $2 or $3 because it has no reason to go up. Next thing you know, it's squeezing up to $4, to $5, to $6, to $7, to $8, to $9, $10, $11, $12, and boom, accounts are blown up, accounts are gone. So this could simply be the result of aggressive short sellers going short at the beginning of the move on a stock that had the potential to have a great imbalance between supply and demand. So what creates this imbalance is the fact that if you look on the daily chart on this stock here, you'll see this S. What that means is that the stock recently did a split. Now, I know that this is a reverse split, and the reason I know is because this is a stock that's been selling off for so long. These stocks don't do traditional splits. Stocks that are going up for forever do traditional splits. Stocks that are going down do reverse splits. And so if we actually look at this on this day, it was just about a couple weeks ago, they did a reverse split of 80-1, an 80-1 reverse split. So if we pull up the SEC filings here for this stock and we look for shares, we'll see, let me go back to the first result. So we'll see that they had a float of 16 million shares here as of November 2023. This is the last quarterly filing that we have from the company. Now, without going through all of these recent news headlines in the last 4 months, 5-6 months, I can't be 100% sure whether or not there were offerings where they sold more shares onto the market. But what we see here is that the float is displaying as 3.5 million shares, but 16 million divided by 80 is 200,000 shares. So 16 divided by 8 is 2, so 200,000 shares. That's a 200,000 share float. Now, unless they've done additional offerings at some point in the last 5 months. So this is a very low float stock. And it's a stock where the chart has been beaten up for a long time. Look at this selling. I mean, this looks like, I look at something like this and I think, is this a Chinese stock? Let's just check it. I'm just curious. Because that's the type of thing we see with Chinese stocks. It may not be, but let's just check. Let's see. So, nope, it's a U.S. company. So they've just had an absolutely terrible IPO. In any case, what we've got here, I think, is a short squeeze. We've had a market that has been very cold, and short sellers have definitely been doing well shorting stocks that pop up. Those of you who watched my recent episode, let's see, where was it? Short selling. How to start short selling. I made a big decision. In this episode, I talk about the decision that I made, which initially was that I was going to start short selling, and then how I was able to convince myself not to do it. And that was in part because of seeing some moves kind of like this. So this stock basically out of nowhere just starts creeping higher. It just starts moving up to 220, and then it punches up to 260 right here. And it gets halted. It gets halted on a circuit breaker for 5 minutes. It resumes and squeezes to 280, to 3, to 320, to 340, to 360, to 380, to $4. It drops down to 340. That dip gets bought up. It squeezes up to 4. Holy smokes. Now it punches all the way up to a high of 471 and gets halted a second time. Now we've got another halt here. It's halted for, let's see now, yep, it's halted there. Second halt for 5 minutes. It resumes and it squeezes immediately from 465 up to 550. It resumes and it halts again. So what's happening here is traders, this is what I suspect, traders who were in this move who started shorting here and here, selling into strength. They're just like, I'm going to short it because this thing is up on no news. It's going to come back down. All of a sudden, boom, right here as it halts up, they're now squeezed. And what that means is that they've created a negative position of, let's just say, 20,000 shares, minus 20,000 shares. And maybe that's just, a high number, but let's just say minus 20,000 shares. And now as this is pushing higher from 4 to 450 and halting up at like 455, 460, let's just say they're down $1 a share on 20,000 shares. They're down 20,000 bucks and they want to get out. They want to cover the loss. They want to cover the position. That means they have to buy 20,000 shares. So what happens here on this candle is the stock opens and squeezes up immediately, and it gives no chance to get out because there are no sellers. Nobody who is in this wants to sell. You only have people buying. And when you don't have sellers, that means if you're short and you're trying to cover, you're fighting with everyone else to get in, to buy. And instantly it halts up. So now at 550, they'd be down $40,000 on that trade right there. It opens, it dips for a second, giving an opportunity maybe to get out. But what a lot of people would do at this point is they would add to the position because it's gone so far against them and hope for a drop back down. If they did add to that position, then they're either holding into this additional halt in a row going up, or they're marketing out. In any case, you have a imbalance to the buy side, and it sends it all the way up here to a high of $11.46, which, just for the record, if you had shorted this down here at 350, you're down 20, 40, 60, 80, $100,000 potentially, just because it keeps going higher and higher and higher. And then right here, it drops all the way down to 7. It actually halts down, which, makes sense. We get that many halts going up. It made sense that we would have a halt down, but it bounces off that level and it surges back up to 10. Now, the challenge here, and I started watching it, the challenge here was that the spreads and the whips were ridiculous. We're on a 1-minute chart. Let's pull up a 10-second chart just so you can see some of the drama here. So right in this candle, right here, we halted up. Right here, we opened at 1050. It dropped to 897. So it drops over $1 a share in an instant. And then a moment later, it's ripping back up to 1150. It hits 1250 and then down 2 points to 1050, then back up to 13. So now, just so you know, if you were in a 5,000 share position here, you're talking about being up and down $10,000 or more in seconds. It's whipping around that fast. So this is extreme volatility. When we look at the halts here going up, you could see how we had the first halt, it opened, and then it was grinding higher as it went up to $4 and then pulled back. And then this is where you had a big kind of volume as it pushed up to 450, halted, and then instant second halt. Right? So you had a halt here, went right into a second one. And then this is the classic dip and rip. And then here, a momentary dip, and then another rip. And right here, another dip and another rip. And it wasn't here until about 11 that people started selling and dumping. And so then you got this drop from 1050 all the way down to like 850. So a 2-point flush. Now that 2-point flush there on one candle happened on like 150,000 shares of volume. So that is the type of like really intense drop that can cost you some money if you bought too high. So it drops, it goes sideways, and then we get that curl back up. But what was surprising here was on this resumption, how we dropped like that, almost halted down, and then it rallies back up. So for me, the thing for me is that when I started looking at it, I missed this ramp up because I just wasn't focused at all. I'd done my recap and then I was uploading it and focusing on other stuff. So I missed this whole move. In this area, I said, no, I'm on the backside of the move. There's way too much risk. I watched this happen and I said, nope, I can't trust that. I don't have a cushion on it, so I got to stick with my guns, not overstay my welcome. And that was the right move. The fact is, on this one, we had a really nice move on the front side, a little extension as it pushed higher with higher volume, and now it's rolled over. It is still up 330% on no news, which is incredible, but it's definitely worth being aware of the fact that this would have been higher risk if you weren't in early. So I feel a little bummed out today because, I got myself up $5,000 and I was like, I'm not overstaying my welcome. I'm going to take the profit and be grateful for that. And then, today's the day we end up having this big move. And of course, I feel like, Oh, today I should have stayed longer. I should have pushed it a little longer. SGBX, this one, if I'd pushed it a little longer, it went higher, but it ended up reversing pretty hard here and coming back down. So front side, back side of the move, volume declined after 11 a.m., but it seems like attention really shifted to BENF. So, you know what? This is great to see. And the more we see these types of moves, the more aggressive I'm going to be, right? If I start seeing this as a pattern, I'm going to try to learn from the pattern and capitalize on it. Because we've been in the context of a cold market, it's hard when it's cold, 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 and then one day everything is crazy because you're not prepared. You're just not expecting it, and you're grateful to be green, and you don't want to overstay your welcome, which was the case for me today. But I saw some of you guys did really well. Of course, this stock was on our scanners, and there were a number of traders in the community that were focused on it. It looked like Danny was up over 10,000 on the day, so he got some nice trades on BENF, which is great to see. So I'm always happy to see you guys using the tools and applying the knowledge that you've gained to trade these, even when I may be sitting on the sidelines. And today I was on the sidelines for it and have a little bit of FOMO regret. But the most important thing is remembering that there will always be another stock around the corner. If it's not later today, tomorrow, next week, there is no sense in getting bent out of shape because you missed a move, or what's worse, chasing and over trading the backside of the move and then giving back your profit from, the earlier trades. So, today didn't end up, I guess I left some money on the table, didn't end up making as much as I perhaps could have. But any day I'm walking away with $5,000 in my pocket. That's more than I had at the beginning of the day. And I was able to mitigate my risk of drawdown very well today. I don't think I was really ever risking going down more than about $100 on the day. And, I walked away at my peak, which is always nice. So let me know how you guys did on this. Hopefully you locked up some nice profits. Big move, great to see. And hopefully we see more of this type of action next week. Now, by the way, if you're not already subscribed to the channel, I hope you hit that subscribe button. And I'll put a link for the 2-week trial in the description and pinned to the top of the comments. I mentioned that during my episode earlier today for my first recap. So 2-week trial, $20, gives you access to chat room, scanners, charts, newsfeed, and a selection of classes, so you can really do a preview of what it's like to be a Warrior Pro member. So check that out. Hope you guys have a great weekend, and I'll see you back here on Monday morning.